Can you buy S&P 500 on Robinhood? Yes, you can buy exposure to the S&P 500 on Robinhood. While Robinhood doesn't allow direct purchase of the S&P 500 itself, since it's an index, not a stock, it does offer various ways to invest in it. The most popular option is buying shares in S&P 500 index funds, or ETFs, exchange-traded funds, such as the SPDR S&P 500 ETF Trust Y, or the Vanguard S&P 500 e-ticker VOO. These funds are specifically designed to track the performance of the S&P 500 index, replicating its returns as closely as possible by holding the same stocks in the same proportions as the index. This allows investors to gain broad market exposure with a single purchase, offering a simple, low-cost entry point to diversify investments across all 500 companies within the index. One of the main advantages of buying an S&P 500 ETF on Robinhood is its simplicity and cost-effectiveness. Robinhood, a commission-free platform, makes it feasible to buy and hold these funds without worrying about transaction fees. ETFs like SPY and VOO have low expense ratios, making them attractive for investors seeking long-term growth with minimal fees. Furthermore, the ease of investing on Robinhood's mobile platform appeals to beginners who want a straightforward way to build wealth by investing in the market. Also, Robinhood supports fractional shares, meaning investors don't need to buy a full share of an ETF, which can be expensive. This flexibility allows anyone to invest any amount they choose, making it accessible even for small investors. However, there are some downsides to investing in the S&P 500 through Robinhood. First, Robinhood's primary draw is commission-free trading, but it does not offer the breadth of financial tools or research capabilities provided by some of its competitors, like Fidelity or Charles Schwab. This could be a limitation for those who want in-depth research options to support their investment decisions. Another disadvantage is the limited range of S&P 500 ETFs available. While Robinhood offers well-known funds, it lacks a wide selection compared to other platforms. Additionally, critics argue that Robinhood's user interface, designed to mimic social media, can encourage impulsive investment behaviors. This structure might inadvertently lead novice investors to buy into the S&P 500 without fully understanding market risks or the importance of a diversified portfolio. Overall, Robinhood provides an accessible, low-cost way for both new and experienced investors to invest in the S&P 500 via ETFs. Despite its limitations in research tools and potential for promoting frequent trading, Robinhood remains a popular choice due to its simplicity and commission-free trades. Investors who use Robinhood to buy S&P 500 ETFs can take advantage of the index's historical growth, which has averaged about 10% annually over the long term, though past performance is no guarantee of future returns.